Welcome back, dear traders. This trading week will be short, and US trading floors will be shut on the occasion of a Thanksgiving Day on November 23. On a Friday, markets will close earlier than usual. For this reason, Wall Street is likely to trade with a subdued volatility. The S&P 500 closed on a Friday with a confident rise of 2.2% at the level of 4,510. The index completed one of the best weeks in 2023. Historically, November is a strong month for the S&P, and this year is no exception. Having bottomed out on October 27, the index has already rebounded by 9.5%. In this week going to be the fourth strongest week for the US stock market. Remarkably, stock indexes have been extending the winning streak since July. The ongoing recovery after correction could be the fastest for the whole history. The Federal Reserve is widely expected to soften its aggressive monetary policy, at least in the short term. Futures on the stock indexes dipped in the New York pre-market. Nevertheless, following the inflation report on November 14, easing inflation in the US fits market optimism. So the odds are that the S&P will add to its confident gains, trading in the intraday corridor between 4,520 and 4,534 points. Growing market growth of the US stocks are accompanied by a fall in the US Treasury yields. On Friday, yields of 10-year Treasuries dropped to the lowest level in 2 months since September 20. It means that treasuries are fiercely competing with the stocks. Besides, rising treasury yields are bullish for the US dollar. Meanwhile, the US dollar has been in a nosedive since last Tuesday. Its index has already lost almost 2% against six rival currencies. Today, the index is trading lower at about 103.5 points, and tomorrow the Federal Reserve is due to post the minutes of the policy meeting in November. Investors will also take notice of existing home sales data in the United States and other reports of a secondary importance. On a Friday, Fed policymakers, San Francisco Fed President Mary Daly and Boston Fed President Susan Collins again said that it was too early to speak about steady inflation deceleration, to acknowledge that monetary tightening has notched its aim. The Federal Reserve needs more evidence of easing inflationary pressure. And the market revision of the Fed's agenda has already caused a strong downward correction in the United States dollar. The US dollar index has dropped by 3.6 from the highest level of the yearly 2023. The greenback could wake up after fresh macroeconomic data. And today the economic calendar is empty. Thus, the index is opening the New York trade consolidating within an intraday corridor between 103.40 and 103.90. The Canadian dollar has certainly taken advantage of the greenback's weakness and consolidation. As a result, the loonie was able to settle at about 1.3660 at the end of the last week. Still, technically, the Canadian dollar looks fragile, and the chart reveals the overall uptrend within the bullish channel. Nevertheless, the loonie is asserting its strength today on the back of the consolidation of its American rival and the support from rallying oil prices. The intraday outlook for the USD CAD pair suggests a corridor between 1.3690 and 1.3730. While the main flat currency is licking its words, the flagship cryptocurrency is extending its advance. Bitcoin traded flat on a Friday in the range from 36,140 and 36,625. The overall caution sentiment softened Bitcoin's zeal. Hence, the number one crypto also entered the consolidation stage at higher levels. And this time, the token is trading within an intraday corridor between 36,415 and 37,510. The growth potential is seen at $37,600. We hope that daily video reviews by InstaForex analysts help you recognize the right market entry points. Feel free to leave your comments and questions and have a lucky trading week. See you online tomorrow.